Welcome to the August 2025 edition of the GECF Monthly Gas Market Report. We would like to present a short overview of the main highlights of the report, which include the major developments in the gas market during the last month. As of August 2025, global GDP growth for 2025 has been maintained at 3% based on purchasing power parity, as forecasted by Oxford Economics. While US tariff uncertainty has eased from its peak, it continues to pose some downside risk to the global economy. The global GDP growth forecast for 2026 also remains unchanged at 2.9%. At a country level, the US GDP growth forecast for 2025 has been revised up to 1.7% and for 2026 revised down to 2%, reflecting the impact of country-specific tariffs introduced in early August. In the EU, GDP growth for 2025 has been revised upward to 1.3%, while the 2026 projection has been trimmed by 0.1 percentage points to 1%. China's GDP growth remains at 4.7% for 2025 but has been lowered to 4% in 2026, with momentum expected to slow in the second half of 2025 following stronger than anticipated growth in the first half of the year. In the first 6 months of 2025, aggregated gas consumption in some of the major gas-consuming countries, which account for 75% of global gas demand, increased by 2% year-on-year to reach 1,808 BCM. Growth was recorded in the EU, UK, and North America, while Asia showed a decline. After a decline in gas consumption in June 2025, EU's gas consumption in July recorded the same level as last year, reaching a total gas consumption of 17.4 BCM. Stronger gas consumption for power generation was largely offset by lower demand in the residential and industrial sectors. Total electricity generation in the EU increased by 5.3% year-on-year, reaching 208 terawatt-hours. Gas-fired power generation grew by 7% year-on-year, playing a key role in offsetting the shortfall in nuclear, hydro, and coal output. In June 2025, China's apparent gas demand recorded a growth of 3.4% year-on-year to 35.7 BCM. China's electricity generation reached a record 796 terawatt-hours in June, driven by increased demand amid persistent heat. While hydro output fell to 139 terawatt-hours despite an early monsoon, solar and wind power hit new highs at 50.1 and 73.8 terawatt-hours, respectively. In July 2025, US natural gas consumption declined by 2.5% year-on-year to 75 BCM, driven by a decreased demand in the power generation sector, typically the main driver of natural gas demand in the US. In June 2025, global gas production growth was estimated at 0.8% year-on-year, to stand at 341 BCM. Africa, LAC, the Middle East and North America showed positive production variation, with North America, specifically the US and Canada, leading the growth. On the other hand, Europe witnessed the greatest output decline among the remaining production regions. European gas production fell by 8.4% year-on-year to 13.5 BCM, the 8th consecutive monthly decline. This was driven by reduced gas output in Norway. However, the magnitude of European production decline was limited by the rise in Turkey's gas output, with the ramp-up of Sakarya gas field in the Black Sea, along with a slight rise in the EU countries' output. In June 2025, China's gas production maintained its growing trend to reach 21.1 BCM, representing a 4.6% year-on-year rise. For the period H1 2025, cumulative production in China stood at 130.8 BCM, reflecting a 5.7% growth. Meanwhile, in July 2025, US total gas production continued its growth trend, to record a rise of 2.5% year-on-year, to stand at 93.5 BCM. This increase was supported by the increased Henry Hub prices, which improved market conditions, in addition to the growing domestic gas demand and rising LNG exports. In July 2025, the EU countries imported 12.5 BCM of PNG, which is 6% less than 1 year ago. Cumulative imports by the EU after 7 months of 2025 reached 84 BCM, a 10% decrease year-on-year. During this time, supply from Algeria increased by 1%. Additionally, supply to Germany increased by 6% year-on-year, while PNG entry via the Netherlands decreased by 17%. June 2025 marked the 14th consecutive month of year-on-year increases in monthly PNG imports in China. The country imported 7.1 BCM, which was an increase of 9% year-on-year. Total PNG imports after the first half of 2025 increased by 10% to reach 40 BCM. In July 2025, global LNG imports rose to 34.6 million tons, reflecting a 6.6% year-on-year increase. The growth was primarily driven by higher LNG inflows into Europe, supported by increasing gas demand for underground storage injection and reduced pipeline imports, due to maintenance activities in Norway. The MENA region also contributed modestly to the uptick, while weaker Asian demand offset part of the global growth. Despite a slight price premium for Northeast Asian spot LNG over the TTF month-ahead contract, netback economics continued to favor Europe, sustaining the flow of US LNG cargoes towards European markets. On the supply side, global LNG exports surged by 12% year-on-year to reach 36.6 million tons, a record high for the month, driven by stronger exports from Australia, Canada, Malaysia, Nigeria, Qatar, Senegal, Trinidad and Tobago and the US. By the end of July 2025, the underground gas storage level in the EU increased to 71 BCM. This represented 68% of the region's capacity but is still 7.6 BCM less than the 5-year average. Around 36 BCM of gas has been restocked over the gas injection season thus far. In Asia, combined LNG stocks in Japan and South Korea were estimated at 9.3 BCM, which was 2 BCM less than the 5-year average. In the US, the average daily storage level increased to 87 BCM, or 65% of capacity. Net gas injections in the US in 2025 thus far have reached 40 BCM. In July 2025, spot prices in both European and Asian gas markets fell after a sharp increase in the previous month. TTF spot prices averaged $11.47 per million British thermal units, down 6% month-on-month, but still 12% higher year-on-year. Northeast Asia spot LNG prices averaged $12.26 per million British thermal units, a 5% month-on-month decline yet 2% above last year's level. In contrast, US Henry Hub prices reversed their recent downward trend, averaging $3.20 per million British thermal units, up 5% month-on-month and 55% year-on-year. Looking ahead, heatwaves in some countries, along with geopolitical uncertainty, could lend support to spot prices. Thank you for watching this short video presentation on the August 2025 edition of the GECF Monthly Gas Market Report. We invite you to download the full report from our website at www.gecf.org, or you can scan the QR code.